All right, good morning, trade pros. Welcome to our morning market update for Monday, May 6th of 2019. This is George Papps of Trade Pro Academy. I know we've been absent for the last few days. The office fought off a pretty savage flu here, but now we're back to 100%. Things are good, and we're ready to rock the market and whatever opportunity comes our way today. All right, in today's morning market update, we're going to talk about the obvious elephant in the room, Donald Trump and his tweet. And we're going to go through some stats and a little bit of an update on the markets overnight, along with Warren Buffett. And it's going to be a bit of a shorter one today. All right, morning market fun fact. The percentage of companies in the S&P reporting earnings per share above the Q1 estimates is 76%, all right, which is above the 5-year average. Meanwhile, the percentage of companies reporting sales above the estimates for Q1 is slightly above the 5-year average at just 60%. All right, so earnings season's done pretty well so far. Remember, though, it's in comparison to expectations, and expectations for Q1 haven't really been that high. So companies are exceeding expectations, but most of them are negative year over year when compared to the last year period. All right, this morning, just about everything is selling off. Everything that's risk related is being dumped, and will continue to be dumped throughout the day. As a pretty big sell-off takes hold here, Donald Trump tweeted yesterday that the trade discussions with China were moving too slowly. And he said that tariffs on $200 billion worth of goods from China will go up from 10% currently to 25%, which is a complete shock to the market. Everyone expected that this negotiation was leading to some kind of a deal between China and the U.S. At least that's what the media has been pumping to traders for the last few months. And we've been here on YouTube telling you that this deal is not as close as it sounds, all right? They make it sound super close. A deal is imminent at any moment, but it sounded like both sides were very far apart, and we talked about that. And as we're rallying off these December 24th lows, we're saying, look, we're going up, and this U.S.-China trade deal hasn't happened, and there isn't any indication it's even progressing, and we continue to go up. So today we're just giving back some of the gains. It's nothing to panic over. It's natural, all right? Donald Trump tweets a policy decision that he's increasing tariffs on $200 billion worth of goods from 10 to 25%. That's going to scare some investors, especially sending a tweet out when the market's closed. All right, that's definitely going to cause some shockwaves in the industry, and it did. All right, and he's saying another $325 billion of goods could be placed on China imports shortly, and that's by this Friday. Shanghai Composite tumbled 5.6%, huge drop in China. Europe is down 2% at midday. United States is suffering their only second drawdown of 1% or more in 2019. All right. Some news outlets claimed last night that China is going to be canceling their meeting with Robert Lighthizer this Wednesday, and that was invalidated. China said they are still planning to come out to the United States with Vice Premier Liu He and 100 trade delegates are traveling to have a broad discussion, which sounds absolutely nuts, and it is. All right, so that's the news. I mean, is there a surprise? Yes. Is it really a surprise, though? No, not really. There wasn't any progress. Something had to give, and this was a decision Donald Trump took to go ahead and stir things up in the discussion. It'll definitely get the discussion moving. I just don't know if we get moving in the right direction, and we don't know that, all right? So it's put a huge unknown into the market, something that we had priced in as being, all right, we're on pace, some kind of solution. Now suddenly looks like there hasn't been any progress at all. It's back to trade war scenario. All right, so everything that's risk on is being dumped, all equities, huge gap overnight. Dow is down 500 points. S&P gap down 32 points, meaning that if you were long the S&P 500 futures, all right, this morning or last night rather at 6 p.m., if you were long from Friday to last night at 6 p.m., you didn't even have a chance to get out. You had a 32-point move against you, even if you had a stop loss. That's the danger sometimes in holding overnight in these volatile markets. 8:49, Warren Buffett is being interviewed on CNBC. He said, cheap money, full employment, and low inflation look like nirvana out here in the market. He said, I didn't think it would continue to be stable, but so far I'm wrong. And said that if this environment persists, stocks will look very cheap, according to Warren Buffett. All right, so Buffett will probably be out there looking to buy. Huh? Yeah, buy. In Asia, Japan's closed today. Hong Kong is down 2.9. China down 5.6. Like we said, India's down 1 percentage point. In Europe, at midday, London's closed. Paris is down 2%. Frankfurt's down 2%. The United States futures, Dow is down 1.9%, S&P is down 1.7%, Nasdaq's down the most, 2.2%. Crude oil down 1.2, but it has rallied a bit to 61.67. It is still holding the 17, so at the moment it's down 1.2%. Gold's flat for the day. Bitcoin's down 1.4, and as you can see, gold hasn't really made a run overnight. It'd be interesting to see on today's session if gold could make some gains. Watch the US dollar and watch the volatility. If VIX and volatility explodes higher along with the dollar, I think equities have a far drop to come. All right. Today's economic calendar, not much. 9:30 Fed's Harker speaking on economic outlook, and that's it. Another big day for the market today. Micro contracts get launched from the futures exchange from CME. This is how they work for the S&P 500. The mini contract at the moment is $50 per point. It requires $500 margin. And if you think about it, with a 10-point average move, that's a $500 gain or loss, making it a little bit big for newer traders. So if you're a newer trader, here's good news. The micro S&P 500 futures contract is out, trading under symbol MES. Currently, we're in month June, so the code is M9. So MES M9, but the main code is MES. All right, then the month followed by the year. It's $1.25 per tick, which means $5 per point, and it costs $40 of margin. So you could have an account as little as $200 and trade the micro futures now. Commission of 74 cents, round turn, so it's really affordable. Liquidity is not that bad. I mean, let me pull it up on the ladder with you guys. I was going to ask Victoria, but I just do it too. So I'm going to go chart, duplicate. Victorio says 18,000 contracts have traded so far. Not bad. How many on the main spoos? 600, you said? 80. All right, I'm looking at the MES contract. You have about average of 30s to around 50 on an average inventory scale. So that's not small. It's actually pretty good, because if you look at the regular S&P 500 contract, it's a couple hundred. So 150, 180, let's say 200 on average. Let's call it 200 on average. So if you divide that by 10, that's 20, but there's a lot more than 20 on the ladder so far. So there's pretty good interest in this product with CME launching it. And there you go. You have the micro contract to be able to trade smaller and stay in demo less time. I'm a big advocate of not spending as much time on demo as the industry tells you. Stay on demo until you're 80% profitable. Guess what? 80% profitable in demo means absolutely nothing for live trading. All right, you're going to go out there and you're going to go out with the confidence I'm 80% profitable in demo, and then you're going to get smacked by a fist called realism. All right, and then you wake up, you're like, oh wow, this is nothing like demo. Right, so with this product, you could get off of simulated trading quicker and still be able to manage your risk on a smaller scale. Big fan of starting small and not spending your whole life on demo. All right, I think you pick up bad habits that way, and sometimes you over demo and then you don't give yourself. I've seen new traders stay in demo for so long that they drop out of the industry after a while, just being solely on demo, just because they've kind of, it becomes a safety net that doesn't really exist. Our job is taking risk, and you want to expose yourself to that risk as quickly as possible so you can learn how to manage it, right? I'm not saying get long maximum margin here, but what I am saying is small start is always best in this industry. Now you got an opportunity to start really small with this micro contract. All right, you guys enjoy it. I'm going to turn around, open up the trading room. That's what we got for today. Risk on assets are dumping. Let's have a look at what risk on does for the remainder of the day. Sell rallies on equities and look to buy dips on gold and potentially the US dollar and VIX, the volatility index. Looks like we're getting some volatility. All right, strap in your seatbelts, grab a coffee, and enjoy the day. We'll see you guys in the trading room. Take care and goodbye. All right, trade pros in the room. Let's get things started. I'll cover the S&P 500, then we'll send it over to Victorio to do NASDAQ. I think Mr. Box is off today. He's got a little bit of a situation he's dealing with. He's okay. Everything's good, but he'll be back tomorrow. So it's me and Victorio today, and Mark will join us for Dow in a moment. So let me get started with the S&P 500 and some key levels for you and where I think the opportunity is in today's session. All right, let me start that out right now.